Good morning to everyone. I don't know if you already have our online participants. Yes, I see Amajit. So good evening, Amajit. Good morning, good afternoon, good evening to all of you, those in the room and those attending virtually. It's a pleasure to welcome you to the fourth, which is also the last day of our board meeting in June. It's been a very interesting week, but I'll speak about it later today. We still have a few things to do today, but before I start, let me first wish or hope that you are all refreshed after the board activity last evening in Governor's Island. And above all, thank Diana and Astu for the impeccable organization, for taking us to that wonderful place, for everything that was so well organized. And we know how much it takes in a week like this. So they took care of us as if we were their children. Everything was impeccable. Thank you, Astu, Diana. I think that she's not in the room, but thank you very much for your support and for offering us that great, wonderful time out, which I think was very important after 3 days in this room discussing. I hope that you all enjoyed it and that you are now ready for the discussions that we still need to have today. And today on our agenda, we have mostly two topics. One is the private equity staff alert that is going to be subject to some discussion and possible comments from board members. And then we'll have a session where we will agree on the direction of the board, strategic direction, work plan, strategy, and etc., on the basis of the proposals that were discussed on the first day, but also on the second day for firm culture and governance. So the staff has tweaked a few things in light of the discussions that we had, and it's for this board to agree and decide what we want to do over the next times. So starting with private equity, the private equity staff alert, I must say that I'm very excited about this. You have been hearing me mentioning private equity frequently as one of the topics that I suspect that will keep us very busy over the next, I don't know if months or years. It's a phenomenon which is growing, exploding literally. So what we know today, it's what we know today, but we already know a few things. And as an ethics standards board, our concern or our perspective about the topic, very neutral, is that all the accountants, firms, etc., are aware of the risks, ethical risks that may arise from this kind of investment, and use the code as is to manage these risks appropriately. So it's really like the name of the title of the document says, staff alert. I'm very thankful to the team and to the working group who has been working on this. It's a little bit difficult because it seems that each day when we think that we have already collected necessary information and evidence, something moves. So it's really a moving target. And that's why I think that this staff alert is a wonderful start of something that we don't know what's going to be in the future, but at least the IESBA is keeping aware, monitoring, and taking its responsibilities as an ethics board to alert stakeholders about the need to use the code and take into consideration the principles, the standards, and etc., when addressing specific risks that may arise from private equity investment in accounting firms. So I'm going to give the floor to Linda. Linda, where is Linda? Oh, she's there. Linda, thank you very much to you and to Jean for the great work, and also some board members who have been supporting the team. And the floor is yours.
Thank you very much, Chair. I appreciate that. And hello to everybody today. First of all, yes, Jean and I have been working diligently on this project, but we've been supported by Rich Heusken, who's had some really good guidance and good comments, as well as Gabriela mentioned, some other board members. So thank you so much for that. We've also been supported by the EIOC members, and this has been a topic of discussion for quite some time now. And I guess that's where I want to start. Let's just stay here on this slide for a moment. and talk about why we're here today. Because I do want to provide a recap. We haven't really talked about, well, we talked about private equity in March and kind of set up some things, but I want to just kind of recap so I can set the scene this morning. As you know, there's been tremendous growth in this space in private equity investment in accounting firms, tremendous growth over the past 5 years. And really, a lot of it took place last year. And so I think that's when this topic got on everyone's radar. Due to the rapid pace of change, IESBA felt like we needed to do something. We needed to get some guidance out there to make sure that everybody that is considering these types of transactions is on the same page. And why is that? Because complex transactions like these with investors that are not other accounting firms, that's going to elevate the risk to independence, to ethical considerations, because these external investors in these complex practice structures aren't familiar with the code. They haven't been working with independents for years and years. And so to help accounting firms manage these risks, IESBA proposed the staff alert. And we're here today to really examine or make sure that this staff alert considers all potential risks, threats. We want to make sure we haven't missed anything. And we've received some advanced comments that were very helpful. And some of the comments were about just tightening up that language and eliminating some ambiguity. And we're well aware of that. We've already started working on some changes. But the big thing today are the 3 questions at the end that really speak to, have we missed anything in this staff alert? So, Jean, I think let's go to the next slide. All right. So we're going to start out. We've got really 3 main sections. Stakeholder feedback. We've done a lot of outreach with different parties on this project. We have spoken with regulators. We've spoken with PAOs. We've talked to individuals in the PE space, and those would be individuals that are working for firms that have received PE investment. We've spoken with individuals that are advising medium-sized practices on receiving private equity investment. So we've tried to do a lot of outreach, but there's still more to do. There's so much going on out there. We've also met with the jurisdictional standard setters in May, and they provided us with some good information. And we have some polling questions, some responses to polling questions that I'm going to go through a little bit later. Then we're going to flip over to Jean's section, which would be the staff alert components. She's going to kind of highlight some elements within the staff alert, which deals primarily with ethical considerations, but more comprehensively, independence considerations that these firms considering private equity investment might want to understand better. Lastly, comments and questions section. This is where we're going to spend a lot of our time because we want to hear from you. That's so incredibly important. And then finally, next steps. All right, Jean, I think let's go into the next slide. So again, I mentioned that we had the jurisdictional standard setters meeting in May. And there are approximately 15 to 18 jurisdictions represented within that meeting, the key jurisdictions with respect to the accounting profession. And so we've got some slides up here. We did the polling questions. We've got some slides. And I don't want to go into the detail of these, but I think there are key takeaways that you can see from these slides, assuming that you can see the details. Key takeaways: approximately 1/2 of the people responding said that there was a PEI trend in their jurisdiction. So that means like the other 50-some% aren't aware of it. So are they not aware because it's not happening? Or are they not aware because there's not a mechanism for this to come to their attention? Remember, a lot of these transactions are private. So you hear about the big transactions that happen, the multi-million or billion-dollar transactions. You don't hear about a lot of the other ones. So it may be happening in your jurisdiction and you're just not aware of it. So therefore, it's important to get information out there to these firms that may be considering private equity funding in your jurisdiction. Another key takeaway would be complex transactions involve a lot of small to medium sized practices. These aren't necessarily going to have a dedicated independence expert on staff. And that's really important to notice because these complex practice structures require a lot of consideration about auditor independence. And while a lot of the bigger firms may have somebody on staff to help them with that, to help navigate, the smaller firms aren't going to have that. They're not going to have independence experts on staff. So they may not consider independence until after the contract has been executed. And that's not the best time to figure out how you're going to develop a system to ensure that you remain independent of the audit client. Another key takeaway is there's lots of complexity in these transactions. So there is a need for better understanding. If you look at the third slide, there are a number of individuals that were unsure about whether there had been an increase in platform and bolt-on tuck-in acquisitions. And I would guess that some of those maybe don't even understand what those terms mean. So again, there is a need for better understanding. Next. All right. So one of the questions, another question that we asked the JSS participants, has your jurisdiction provided ethics-focused support materials to assist in complying with their ethical obligations when considering private equity investment? And we got, I have to say, there were fewer jurisdictions that had provided guidance than not. All right. So there is still a need out there for guidance. But I want to point out that over the past 2 weeks, if you're tracking this subject at all, you'll see that Accountancy Europe, the Institute of Chartered Accountants in Scotland, other entities have provided guidance in addition to all of the other guidance that's been provided by organizations like IFIAR, AFM, et cetera. So there is a lot of information out there, and that's quite helpful, but there's still more to be done. Next slide, please. All right, so on this question, this speaks to, the question is really about ethical challenges that you've identified in your jurisdiction. And bear in mind, these are challenges. These are not necessarily episodes. So they're challenges. The standard setters at the JSS meeting are considering these, are thinking about what are the challenges that the firms and the professional accountants in their jurisdiction are going to be dealing with. And I think the key takeaway from here, again, structural changes create new and different ethical and independence challenges. And it was interesting. I was reading a speech from Paul Munter recently, and he quoted a membership organization that represents private investment industry. And the quote was, "They are continuously evolving universe of entities." All right, continuously evolving universe of entities. So if you think about that and you think about independence and how firms are going to assess independence with respect to their audit clients, oftentimes with just a traditional accounting firm structure, it's challenging. But then think about with private equity investing in the accounting firm, which may include the audit firm as well. That PE firm is also going to be investing in other portfolio companies. So now the audit firm, the auditor needs to look at possibly, depending on the structure, portfolio companies, other companies that they hadn't considered previously. So that's incredibly important, and that's the I think the elevated risk that these structural changes create, and they're always changing. Remember that the purpose of private equity investment is investing, so you're going to go where you get your best return. So that means these structures outside of the accounting part, the portfolio companies, are ever evolving. Next slide, John. So I think this was the final question, the polling question. Yeah, and it's basically, are you aware of any regulatory actions? And it's important to note, again, there are not enforcement actions in place, but there are regulators that are really they're inviting open communications. They are directly engaging with firms. And I think that's really good because we have heard from regulators who say that the firms are coming to them and talking to them about these structures that they're contemplating to make sure that they are considering them properly in a way that's not going to result in some sort of enforcement action. So I think the key takeaway from this is just there is awareness from the regulatory community, and they are providing assistance. And I'm sure that they will continue to do that as time goes on. All right, Jean, next slide. So it's time to talk about the staff alert components. Jean is going to kind of provide highlights of what's in the staff alert, which really focuses on ethical considerations and kind of more comprehensively independence considerations when firms are talking or contemplating private equity investment or receiving private equity investment. So Jean, I'll turn it over to you.
Thanks, Linda, and hello, everyone. So as Linda indicated, I'm just going to walk you through the staff alert, just highlighting the components. And the staff alert started off with introduction, highlighting this trend that we've been noticing and encouraging the professional accountants to remain vigilant in upholding the compliance with both ethics and the independence standards. So it does emphasize that threats can exist and that they need to consult the code in that regard. There are a few examples included to show when you're accepting new clients, managing business relationships, or there's governance structures. Some relates to pre-investment kind of considerations, and some relate to post-investment considerations. We did receive a comment that maybe that should be clarified, so we will tighten up, like Linda said, we'll tighten up some of the language to clarify when you should be considering certain elements. The staff alert is also gives an example of a structure. So that is an example that we've shown many times during the board meeting so far. It is a common structure where the PE is investing, or the fund is investing in a non-audit firm. Although from the communications or the outreach, we've realized that this is actually not always the case. Sometimes the fund do invest in an audit firm directly, and sometimes those audit firms do public interest entity audits. If you remember those 3 slides that Linda showed, it actually indicated that summary. So it's very often that we notice that in the US, is often that it's the investment in the non-audit firm with a network firm that's an audit firm, but that's not always the case in Europe. And that's also what we found from our outreach with the Netherlands. AFM has actually indicated that as well. So the component that the next is the ethical considerations, and it's very important that recognizing that the fund can either invest in a non-audit as well as an audit firm. It's important to highlight the ethical considerations, because independence apply when it's an audit firm, but the ethics would apply to that non-audit firm as well. So it highlights that no matter what role you portray, that you need to consider the ethical threats and to apply the fundamental principles, and that is the bedrock of ethical conduct. There is some examples of ethical considerations up there: confidentiality, professional competence and due care, objectivity. And this is just examples. It's not all of the fundamental principles, but just to give a flavor for those ethical considerations. Like I mentioned, the staff alert emphasizes the fact that the conceptual framework is the framework to help identify, evaluate, and address any threats, and that the professional accountant is encouraged to apply professional judgment and safeguards to ensure ethical conduct is preserved. So the core of the staff alert pivots around independence. And this section introduces a systematic or a structured approach to addressing independence. And there's basically three main steps, which is the first to identify all the entities within the PE structure. The second is to determine any relevant individuals whose roles might impact independence. And then the last also to review all relationship interests and services that might be considered or should be considered when evaluating independence. The section encourage the firms or the professional accountant to follow a methodical approach and to be proactive and to remain compliant with independence, the international independence standards, and to evaluate these threats on a regular basis. As Linda mentioned, and we know this is ever changing. It's a dynamic space. So it's not just a once off, whether it's pre-investment or post-investment. It needs to be done on a regular basis to ensure that all the considerations are considered and that the firm remain independent when they are doing specifically audit work as well. So just delving into the three elements. So the first one is around identifying all the entities within the structure. So there's, in essence, there should have been three lines. So the first is to determine whether who constitutes the firm. And that is applying the definition as included in the glossary of the Green Book, the handbook. There might be some language that needs just to be clarified in that section. We did realize that there might be a little bit confusion. So just to determine which entities would be considered as part of the firm and when it's captured within the firm definition. Again, the code does not define control or significant influence. The staff law is not intending to do that either. It would be based on the facts and circumstances of the specific investment. So the second element is a network firm. So as we are aware that a network firm should also need to be independent of the audit client. So it is crucial to determine whether a network, a larger structure, is created in accordance with the code, and that's section R400.53, and in which entities are then constituted as a network firm to assess whether they need to be independent from the audit client. The last one is any other entities that's associated with the PE structure that need to be considered. This includes, for example, portfolio companies, either within the same fund or the different fund, general partners, professional companies, service providers. Again, jurisdictional requirements might also be important as a consideration in this regard. And as we heard as part of the CIV project as well. So that needs to be determined based on the facts and circumstances and based on that specific jurisdictions. One thing that we did really also seeing, and as an upward trend, is that a lot of these investors are current investors in accounting software firms. And so that might be also need to see how independence would be impacted if one of the portfolio companies is also an accounting firm or an audit firm. So those are the things that we will try and highlight as well. So the next slide just summarizes the two final steps. So the first is to identify all the relevant individuals. So that would speak to your engagement team as well, your audit and assurance team members. Again, the staff load also recognizes that there might be jurisdictional specific requirements and that those individuals need also to be considered. And the last step is to review all relationships and services. This speaks to financial interests, business relationships, and family and personal relationships. Again, an advanced comment that we did receive is maybe just to clarify exactly what we mean, be clearer in the examples that we are saying on when you are considering the financial interest or the relationships. So we will look at that as well. It's very, very important, and like I mentioned, and Linda mentioned that as well, that we want to bring across that these firms need to evaluate on a regular basis how these different components are working, the different entities, the services that's being provided, because it can change from one day to the next. Also, the involvement of personnel, when there might be personnel movements as well between, so that needs also to be considered. So the staff alert concludes in the fact that that the professional bodies or the legal counsel might need to be consulted. So based on the firm or the professional counsels need to reach out and be aware of what's happening in their jurisdiction. Regulators and might also provide some guidance Linda referred to, and that there's also maybe specific laws and regulations that need to be considered. So the aim of the alert is to highlight that although the PE funding is reshaping the accounting profession and the environment that the firm operates in. So it's very important for the firm to remain alert, apply professional judgment, and as best practice is trying maybe to document these type of things to see what is changing. There might be some wording in the staff alert that we recognize that might be a little bit more of authoritative nature that we need to look at, and just to see that this is a non-authoritative document. And that's from me. Then I'm going to hand over back to you.
Thank you, Sean. All right, so just a reminder, at the March board meeting, the board members reviewed and we discussed the framework for this staff alert. So we received a lot of good comments during that discussion at the March board meeting. We took those comments back, and that is really what's informed this staff alert. So we believe we have incorporated all of the suggestions and comments that were shared at the March board meeting, but where we are now is we've drafted this staff alert, and we're presenting it to you, and we have these questions. So Chair, if you'd like to open it up for responses to these questions that we put out.
Sure, Linda. Thank you very much once again for the very good presentation, very clear. I think that this presentation, I'm assuming that everyone has read the staff alert, but this is very rich presentation about how the working group got there and what's behind the thoughts and the considerations in that staff alert. So I'm opening the floor for comments, questions that you may have, and I see David. I think you were the first.
Thank you. So 2 clarifying questions from me. On one of the slides, you talked about bolt-ons and tuck-in acquisitions. If you could maybe just explain what that is so that we all have a common understanding of what you mean. That's my first question. The second question is, did you do or receive comments from PAOs? Because I'm seeing some PAOs that are actually monitoring this situation. So I'm wondering if you got their comments and their feedback around what they're doing, as well as the jurisdictional standard setters. And then maybe just the last comment, and more, I think, just a suggestion. There was an article last week in the Financial Times in London that specifically talked about PE-related activities. And one of the areas that they touched on was the ratio of return on exits. They were talking specifically about exit strategies and looking for their multiples. And one of the things that I was reflecting on, as you've talked about independence, which clearly is a key area, we all understand that, the pressures around achieving certain earnings, certain targets, could actually be heightened over what PAIBs, for example, even deal with, and they get a lot of pressure. So it might be worth just thinking through not just the pressure they might get within the accounting firm itself to achieve certain earnings, but how that might cascade out into the work that they do, and whether or not there are any consequential risks that perhaps they don't face today because those same earnings pressures are not there. So just something to be thinking about. Thank you.
Thank you, David. I suggest that you respond, Linda, because there were 3 questions in one question, or 2 questions in one comment. So it's better to respond.
Thank you very much. I'll let John respond to the bolt-on and tuck-ins. But as far as the comments from PAOs, we have again, spoken with various stakeholders. So we have spoken with PAOs. A lot of what we've been doing is reading the information that PAOs have been releasing. So there's a good amount of information in there, and we're able to follow up with them if we have any questions about that. With respect to the Financial Times article, yeah, you and I talked about that last night, and we recognize that. The objective of these investments is, of course, to get a good return on investment, which is a little different than what a traditional accounting firm would be looking for, which is more longevity, consistent profitability, reputational increases. So we recognize that. We do recognize that pressure is a key issue within these types of relationships, and we have addressed it in the staff alert, but we'll certainly go back and kind of take your comments in mind about, the pressure that PAIBs face and how this is higher. So I hear you, and we'll go back and look and see if we can kind of fortify that area a bit. Helen?
I was wondering whether we're going to get a question on bolt-on and tuck-ins. So what we've seen is that the PE fund actually invests in one firm, and they often create a platform firm. So a bolt-on is more an entity that keeps its own identity, but have supplementary information. So maybe they can do referrals, where a tuck-in is kind of more an absorbed entity within the structure. So, but it links also very closely to mergers and acquisitions. So there's also a consideration around that. But I hope that clarified it.
Thank you very much, Linda and Jean. Mark, please.
Thank you. Well, firstly, I think this is a really sort of thoughtful piece of work. I think, it is a complex area, and I think it brings together a lot of the considerations really well. When I was looking at it, I did also sort of wonder about that exit strategy piece, because although we've not seen many of them, we know there will be ethical and independence issues as a result of the exit. And I wonder whether we don't need to sort of work it all through, but we might want to say in the alert, we are aware that when investors exit from their arrangements, there will be ethical and independence issues that have to be addressed. And, that we propose to issue further guidance at that point, but we just haven't seen enough of that to make it possible at this stage. But I think, it brings together all of the key issues really well, and I think it does provide that sort of helpful framework there for people thinking about what the issues are.
Thank you, Mark. Nancy, please.
Thank you, Chair. First, I want to acknowledge the staff's work on this. It's a very complicated area. I think this is very important work that we need to get something out. Having said that, I have provided some feedback at a high level to staff, and I have more granular feedback if they choose to want that. But there are some things I think that in approaching this, I do have concerns that we are clearly messaging what it is we want PAs to understand and PE firms to understand in evaluating the risks that may be associated with this, including the risks of not complying with the code because certain entities or individuals have not been appropriately identified that would require compliance. One of the things that struck me, Jean, as you were working through the presentation is what I consider to be a really articulate process for how you would work through considerations here. And I think that process, and I'll step back just a bit, I believe, and perhaps others might disagree, but I believe the objective of an alert is to raise high-level awareness, but not necessarily to provide granular detail about how to execute or respond, that sort of thing. I think what we really need to do here is to get people on alert that might not, and I think Linda, this is to your point, that might not be independence experts. We need to get them aware of what are the things they need to be thinking about and identifying where there might be new relationships or new individuals or entities where there is independence compliance that is necessary to comply with the code, including the conceptual framework. So John, I really liked your process that you laid out, the definitions, right? Who is the firm? Is there a network entity? What is the network firm if there is one? And then how you work through identifying those that need to be independent, what restrictions look like, and then I think ultimately identifying where the conceptual framework may also need to be applied. I think if we can describe, a thought process that helps people clearly work through the things that they need to think about, because at the end of the day, I don't think that what we're describing is new in the sense of this is new content. It's just a new environment and how you apply to a new environment. I think by doing that, you make this highly scalable. And so I think to the extent that you have the PE investment in the audit firm or in a network entity, or there's some other type of animal that comes up in the future. I think we're seeing joint ventures and all kinds of things. I think the scalability of a process that goes, you need to consider these things every single time. I think that would be incredibly useful. What I did find challenging as we got into the more granular examples, and in particular, when we got into what I would consider more how to respond, the safeguard type things, it seemed that we were moving away from what I would consider to be an alert bulletin and something that is raising awareness into more practicalities and something that I would consider more technical guidance. So I just would caution that, maybe focus on what your real objective is. And then, and I'm probably expressing a personal bias here because I think I've said this several times this week. We can always build onto that as the need arises and do that in ways that I think, people have particular circumstances, and I think you can provide FAQs or more granular guidance. The other thing I just flinched a bit about is the use of the term best practices. Is when we use that term, I think that there is an implication that we would expect that people would actually apply best practices. I think there are common practices. I think there are considered practices, but those things that are best practices, I think firms have often a variety of mechanisms that they may be able to use in order to meet compliance requirements or considerations in this conceptual framework. And I just caution us a bit about implying that something is more of a recommendation as opposed to a consideration. Thank you.
Thank you, Nancy. I don't know if at this point you want to respond or if I can collect a few other. Okay, so Chana, please.
Thanks, Chair. So I think you sort of addressed my general comment, which was that when I sort of read through it, the general assumption was the investment was already made versus pre-acquisition. I have some other comments. I'm just trying to process what Nancy was saying about staff alert versus what is this actually. I mean, I think maybe we might have to decide what we call it, because with what you're saying, this has more detail than an alert. So we might have to decide what we actually call this, because when you go to paragraph references and all of that, it provides much more granular detail. But having said that, I'm not too uncomfortable with this document. It's just that what do you call it? It's much more than an alert. And some other comments is that, the diagram in it, when you describe the general partner management and fund A, I found it like for someone who doesn't know anything about it, like what is the accountant's ownership in each of these? There's no description of it, or what is this, the function of this. So maybe a bit of detail around the three would be useful, because as you said, some jurisdictions didn't know much about it. And it's because I think in most cases there's not much happening. But it would be useful for someone in a jurisdiction that has not a lot of it when it sort of starts coming on. Then in paragraph 11, on conflicts, there's a example used of valuation of assets of two parties. Isn't it better to use something that is very specific to PE rather than something that is unrelated to PE? And then another comment is that, I mean, and this will depend on what you want to do with the document at the end. Sometimes there's very detailed references to the code, and sometimes when there are clear references, there's no actual references to the code. So some comments to enhance the document.
Thank you, Chana. Christelle, please.
Thank you, Chair. I understand what you said as a. I understand what you said as an introduction, that you don't want to define the control. But in fact, a lot of the threats are linked to the kind of control. And when I understand the code that says that everything that controls the firm is the firm, and everything that is controlled by the firm is the firm or the network firm. And now we say, well, we don't want to go further on that aspect of control, but we show a diagram where it is unclear what our appreciation of the control there. And if the PE investor is part of the firm or not, if you understand. Because the diagram goes from the fund to the non-audit firm. But depending on the relationship with a non-audit firm and audit firm, the fact that the audit firm has its independence of means or not, etc., etc. The chain of control is affected, right? And so the simple diagram there seeming to say, well, it is not a question of who is part of the firm or not here. That struggles me a little bit because it's part of the very high difficulty of appreciating this kind of situation. So this was my main message. Then I had the impression that sometimes we are quite loose in the messaging. The firm might choose to do things or not. Where was it? Oh, it was in the general partner management company should consider if this GP or management company controls. At a minimum, firms may choose to treat. So, well, please do what you want. Huh? So, and my last message was: be sure that we do not use a general wording that is not existing in the code, but seems to be well known. For example, firm management. What's that kind of organization in the general world? We can understand. In the code, probably not. So just to be sure that we're not mixing concepts or.
Okay, thank you, Christelle. Rania, please.
Thank you. Personally, I really liked the document. I found it extremely helpful and very practical. Whether staff alert is the right term to use or not, I don't know, but I felt that it is extremely helpful. It really gives you a good idea of, the thought process as you approach something like this. And I like the boxes, and I really found it very useful. I have just basically two comments. The first one is item 4, and just for something for your consideration. When you say a culture, such a mindset helps to instill a culture of compliance. I was wondering if you want a culture of, we're looking for a culture of compliance or an ethical culture, or to maintain rather than to instill, but to maintain, because we're assuming that that culture exists and you do not want it to be impacted by the PE investment. Then the other thing is, and which you alluded to in when you were presenting this, Linda, the issue of the transparent communication with the PE investor in item 5, and so you say it there, but in my mind, if we're looking at the thought process, I would start off with it, because in my mind, the thought process should start with ahead of time, making sure that you have everything clear with the PE investor, including, I would tie this in with the issue on data confidentiality on page 4, this item 11, second bullet, because again, you want to make sure that the PE investor is aware that, we will not be sharing any data, and these are like red lines we will not cross. And then I would get into, once the investment has been made, then when should we consult the code in order to go about our business. But I mean, as a starting point, let's make sure that we are on clear terms with the PE investor, because then we might find ourselves in, I mean, we'd avoid putting ourselves in a position where we are pressured or a conflict or. Thank you.
Thank you, Rania. Luigi, please.
Thank you. Thank you. And I found the presentation very, very useful in explaining the process followed in preparing this document. Currently, this document seems to be a hybrid between two distinct concepts. I found one concept well explained in the presentation, but the document has still two different souls, basically. On one end, it is an alert indicating possible areas of concern, the issues that need to be considered, examined, and how to use the code. On the other end, it presents itself as a technical analysis of certain scenarios, which are only briefly mentioned and treated in a technically not always accurate manner, with terms not always appropriate to the code and to the technical content. This approach can sometimes be unclear, and in certain parts, it seems to me they are unclear, and it can appear also sometimes not very accurate, and I wonder whether this is the way we should express ourselves when dealing with the code. I believe that it is necessary to decide the purpose of the document, whether the objective is to activate an alert on issues that we consider of key importance about the private equity transaction. And if so, I think that the document should be revisited in order to limit itself in identify use cases, scenarios, and providing an approach to address this situation without pretending to be too detailed in examining these facts and the scenario that could be and should be, in my view, subject to further steps, work, document that I hope the staff will go on preparing, considering that this is really a key area for the future. If on the other end, the intention is just now to prepare a technical document that could be exhaustive or not, but it should be technical in nature, then in my view, it is essential that the document is precise, accurate, uses the language of the code. It should explain the reasoning, the circumstances, the possible cases, and always specifically refer to different entities under consideration. In other words, present an illustrative example with certain entities, fund A, portfolio company B, and so on, and be very clear in the conclusion under various scenarios that are mentioned in the document and speaking with the code language. Some example to explain my thinking. In the document, there is sometimes overlap between the concept of firm and network firm, and sometimes it is not very clear which is the element we are dealing with. There seems to be the use of terms like group as a premise to conclude about the existence of a network. Such concepts, though, are not directly part of the code. Concepts like synergies are introduced to assert the existence of a network, while the code uses a different approach. By creating synergy is not the same as aimed at cooperation. Certain factors to consider are excessively simplified. As an example, sharing of resources for the code is not necessarily consistent with the concept of sharing expert, and sharing expert has been used as an example. In conclusion, I believe that the alert should be the first step that IESBA should develop, not the only one. And then we need to consider technical document more detailed in order to support the profession in addressing this type of transaction. So I recommend the staff to reconsider this document, to decide what it is, but then to be consistent with the nature they would like to assign to this document.
Thank you very much, Luigi. Paul, I'll ask the next ones as possible to be to the point because time is flying. Paul, please.
Certainly, thanks for that. I think it goes, it's that question, are we giving an alert or technical guidance to the question I'm going to ask? But just in terms of, as we're looking at issues around objectivity and self-interest, there's a lot of focus on what happens if you're kind of financially beneficiary, but where does the aspect of you might be engaging with entities that your competitors are invested in? So then starts to bring a whole new approach to how you're engaging those types of entities, because you might be seeking to frustrate in a competition rather than just your own benefit. But I might be going into too much. Thanks.
Thank you, Paul. Yohei, please.
So thank you, Chair. I'm very much resonated to the comment David, Mark, and Lanya made. So generally, in PE investment, the short-term profits are highly emphasized, which causes concerns regarding the causes a concern that such a management policy causes culture and governance and independence impact on the firms. So there should be the continuous consideration for those impacts. And in doing so, it's useful to obtain feedback from actual state of the PE investment from jurisdictions where the PE investments are increasing. Thank you.
Thank you very much, Yohei. Sunam, please.
Thank you. Yep. I have a few observations. Just briefly, in general, I like the thought process, so we can keep it. That's my observation. And secondly, sometimes the description of details is not balanced or is not even, so we need to keep in mind that a description is even for each and every topics. And lastly, as Mark said, I believe it's a good idea to include the exit consideration. Thank you.
Thank you, Sonam. Amajit, please.
Thank you, Chair. So first, I would like to compliment the staff for developing this piece. We've been discussing this important topic both in AIOC and also in the board meetings in the during last 1 year. So it's good to see some tangible, concrete outcome which we have in front of us. I have two general comments and two specific comments. So one, I agree on the general side. I agree with Luigi that if we can define our objectives of this paper and this exercise more sharply in the beginning of the paper, I think it would help. Second general observation which I have is that I personally don't, in terms of the structure and the content of the paper, I don't mind some detailing, some flesh around the issues that have been flagged because A, it is a very complex area. B, those examples which have been given in the paper, they make the paper more self-contained, self-evident. So I think it is actually helpful to my mind. Two specific comments. One is on the relationships and services. This is para 30 of the paper, where the paper talks about the situation where private equity firm has financial interest in an audit client, and then there could be conflicts. I was just wondering if you want to also capture the reverse situation where the audit client, of the audit firm, it has invested in any fund launched by private equity player. Just the reverse of what we have described in para 30. Maybe both situations are important. Both will create similar conflicts of interest, and if it is deemed fit, this could also be added there. Second is a relatively more minor comment on para 4 and 5, which Rania also alluded to. So in para 5, we are talking about the need for transparent communication with the PE investors, with the PE investor is key. So a very silly question actually I had was, who do we have in mind? I mean, who will do this communication? While reading the paper, that doesn't really come out. So there's need for more clarity. What is the expectation? Who actually is going to do this communication? That is one. Second is in the same paragraph, we talk about that the investor should be made aware that certain business opportunities might need to be declined or structured in particular ways due to firms' ethical and independence obligations. So my thinking was it is not just the business opportunities, it transcends that, it goes beyond business opportunities, and communication may not be just limited to specific business opportunities. It could probably look at making it broader, including business opportunities. I'm not saying they're not important, but can we make it more broader, the suggested scope of communication, where we want a greater sensitivity to the code and the independence and ethical considerations. Thank you.
Thank you, Amajit. Sadia, please.
So every time we have a PE presentation, I keep learning. So it's a complex area that's really hard to keep track of, but I haven't seen a paper that explains it. And I think this is serving that purpose, that there's no paper that explains it. I was reflecting a bit on IESBA's staff alerts previously, and I hope I'm being complete in this, the problem statement was set by someone else. There was a crisis or it was a war, and then we provided guidance. In this scenario, we don't actually have the problem statement, and that's why it complicates things because we need to explain what the scenario is. I have heard all the suggestions, include pre, include post acquisition, and I think what I would want to do is propose some solutions for the project group. So the first one is there's a balance between what you can say in writing and what you can say verbally. And where it's possible and it's difficult to put in writing because we don't have enough said in the code or it's difficult to articulate, I would say think about what comes after this project and how we socialize it and how we keep that for later. I think we're missing a disclaimer. And I think that's obvious just from this conversation and previous conversations. This document is not going to be complete. It's not going to be complete. New issues, it's a dynamic space, things keep on coming up. We should acknowledge that and then really explain what non-authoritative means. Because there's no other guidance on this issue, this might be seen as a statement or something that is more than authoritative. I think that we should start thinking about how plans are to socialize this document, if this is one of many documents or if this is for now, and then think about what's the next steps on increasing that conversation and who we invite to that conversation, because we're not the only people that are putting out alerts on this nature. And that's the fourth thing. I do think that we have things, and I really like the JSS meeting, the tone was people are engaging with the regulator and PAOs. I think we should highlight that. It's currently in the conclusion, but we should bring it into the document saying we encourage this kind of behavior, that if there is a conversation to be had in a transparent way, it should be had. And others in different jurisdictions or even other bodies might be issuing guidance on this and PA should be keeping track of that. Thanks.
Thank you very much, Sadia. Tomoyo, please.
Thank you, Chair, and thank you, Linda John, for the preparation of the staff alert. I think it's a good starting point. First, kind of a couple of people said, but I think the word used in this terms used in this staff alert needs to be accurate. For example, in the diagram on page 3, it says private equity firm, but normally we use a firm where for a corporation where PA exists, so maybe there might be confusion if we say private equity firm. The second thing, so PE firm owns financial interest on these network firms, so there is a clearly an independence issue. So I think it's better to start admitting that there is an independent issue, which if it's a relationship between an audit and an audit client, which is not allowed, is happening. So we need to highlight that part. The second is the characteristics of the PE firm, which they have a exit strategy. And that is kind of things that make me worry. Also, holding interest means that there can be a change of the owner. So the PE firm might sell it to another company, which the network firm, audit firm may not be controlled. So that is so. The important thing is to consider this issue at the pre-acquisition timing. After acquisition, it's hard to control, I think. And lastly, so who this alert is intended to, which Amarjit raised, is a good point. I think it should be the farm management, and the farm management to be accountable about this issue. Let them be responsible that this won't impact the quality of the audit. I think that's the. Otherwise, the PA, there's not much that the PA can do if the farm management is makes this change happen. And so we have been discussing in the past meeting that the farm culture and governance is we cannot separate this topic because the farm culture and governance. So this kind of things that have been discussed in the past, I don't think it's not perfectly covered in this document. In the past, we have been always talking about the relationship between so that when AICPA comes, always the explanation was there's the audit firm is independent from the private equity firm because they are funding just an audit firm, and there is a war between audit firm and non-audit firm. But now we are admitting that that's not the case, and there is an independence issue between the private equity and the firm. So I think we should start from admitting that point and let the firm management be accountable. I think I will expect such kind of message in the staff alert. Thank you.
Thank you very much, Tomoyo. I see Sungnam. Do you still want to speak? No. Okay. So Ken.
Thank you, Chair. Just a couple of observations really in the context of the board discussion. First of all, we started off with the objective of making this document a staff alert. And if the project team has strayed a little bit beyond that, certainly the project team can take the board's feedback and consider how to achieve that balance. My second point, I suppose, is that whilst we intend to have a staff alert to raise awareness about important considerations from an ethical and independence perspective, it is still going to be very important to provide some specificity in the context of PEI, because otherwise this document is just going to be a generic document that contains extracts to the code without any relevance to PEI. So whilst I appreciate a number of the comments that have been raised by board members about being careful not to stray too far into the technical area and into essentially an attempt to apply the code to specific scenarios. We still need to strike a balance between, as I said, providing some relevance, some context to PEI, as opposed to simply pointing readers to certain aspects of the code or certain provisions of the code or whatever principles we believe are important in that context. So some level of specificity is going to be important to make this very relevant. Thirdly, I think the project team can take back the feedback that the board members have provided. There's going to be more work to be done to try to orient this in the right direction. One key message I take from board members is that this should not be the end of the road. If anything, this is probably the start of an ongoing conversation. Potentially, there might be new issues that come up that might require perhaps a more technical treatment of those issues. And there will be opportunity for the project team to come back to the board in due course as this environment evolves. I would say that at least from the document we've seen, maybe there could be one or two areas that would merit some elaboration. Again, being careful not to get too granular based on the comments that we received. One point I picked up is the point that David raised early on in relation to the issue of pressure. As it relates to achieving a return or achieving a certain target on exit, I don't believe this document has appropriately touched on this issue of what it would mean in terms of internal pressures on the accountants themselves, on the firm itself, in meeting the objectives that the PE investors might have set out as part of the strategy for the investment. So that is an issue that should be flagged so that the relevant leaders within the firm take that into consideration as they consider those investments. I suppose I did have a couple of questions that would perhaps merit some further conversations with board members offline. I think one question I had was what Nancy raised earlier, which is this concept of best practices. I did a search in the document. I didn't see any reference or use of the term best practice. So maybe this was raised during the presentation. I'm not sure.
Ken, I think that Jean used it during the presentation. So no, I did not see that. I will say, though, there were things that would imply things that firms should do that I don't think exist in the code. There are those examples.
So certainly the project team can take that on board. And I think we did receive some comments that were quite detailed, and maybe the project team, I would advise if you could connect the individual board members to have the comments fully clear and understood. Thank you.
Thank you very much. Can see Vanya and Rich. Vanya, please, I'll just ask you to be as brief as possible.
Thank you. I'd like to start congratulating the team of such hard work. And I would just like to stress what Ken said. This is not the end of the road. IOC will keep on following this team in order to verify what must be done in the future. But I would just call attention for the slide that Linda showed at the beginning that shows that 57% established that they had no problem with PRI. And the question was, is that really true, or they do not yet know what it is and what the problems involved with that? And I think that it was one of the reasons why this document went a little bit beyond the staff alert, because we also need to educate people to understand what the risks are, and so they can look at their reality and identify some problems. But I understand that the comments from the board are very welcome, and the team will keep working on that. And IOC is very grateful because it helps us further in the way. Thank you.
Thank you, Vanya. Rich, please.
Yes, I think as we went through and listened and consistent with other comments we got from stakeholders, there's a fair amount of people saying, well, given what we have read from the financial press about how private equity squeezes out the profits, we have all kinds of concerns. We've heard it about hiring people and all this, lots of things. And we brought this pressure point up. I think we need to be sensitive that if we're going to raise something, it has to be rooted in the code. And in many scenarios, the PE will not have control over any entity. And therefore, its ability to squeeze is limited to say, I'm not putting any more money in. All right. And so I think we need to be a little careful here, because I don't know I'm not sure I can write something that says you should be sensitive to the pressure they put on you when it's time for them to sell, because we don't have that in the code, right? Unless it's somebody directly trying to pressure and influence the outcome of a service, a non-audit service or an audit. So I just think I want to temper expectations in that area, because I think as we've talked about this, there are challenges as to what you can really say. Thanks.
Thank you, Rich. Hector, please.
Just briefly to mention that this point that Rich is raising is the direct link between this project and firm culture and governance. This is exactly what we're talking about. This is a risk of somebody investing and changing the culture and the governance of the firm, and we are not currently addressing this. This is the perfect link between those two issues.
Yeah, thank you, Hector. Obichuku, please.
Thank you very much, and thank you to the staff for the alert. It's very timely and keeps us ahead of emerging trends. So I just want to comment on the circumstances that might create threats to the fundamental principles. And I feel that integrity is one of the principles that private equity investment in accounting firms can cause or raise a threat to. So integrity is very key when you consider when there's pressure for meeting up with your IRR. Then I also want to say that this private equity investment in firms can be an opportunity for IESBA as a value proposition to it's an area that we can push show our value proposition, like the SAC said that we should bring out value propositions to stakeholders. So I think it's a very big area. Like every other person, most people have said, the connection between the private equity investment in firms and ethical culture of firms. So I think the staff alert or the staff should also look into how to project it as a value proposition that the IESBA code can provide to professional accountants and professional accounting firms. Thank you.
Thank you, Abichuku. I think we don't have anyone else. Thank you very much for these very substantive contributions. Of course, the staff will take, as Ken said, we'll take these comments on board and see what's the way forward. We heard about the title, and the title is not because of the title, it's because of the content, which kind of document this is. We heard about the structure, some preferences expressed for something more high level, and probably leave the more technical thing in another format or not. We heard about language, sometimes too loose, sometimes needing some adjustment in terms of rigor and anchoring on the code. Questions about is this a one-off or the first piece of a series? So this is a lot of things that the staff will consider. I think that we can do very good things with these comments. But I'm not going to give my opinion here because, of course, we need to discuss with the staff. This is a staff document, but I think that we can, in a very relatively easy way, bring these comments on board and do something which reflects at least some of them. Now, just one thing, it is my conviction that this is not going to be a one-off. Whatever we decide about this document, if we keep it as is, or if you separate it and issue something more high level and then something more technical and more extensive or comprehensive or whatever, many options, whatever it's going to happen, it is my conviction that it's not going to be a one-off, because this is really something which is moving, growing every day. I'd just like to raise your attention and drive you to a document that was issued this week by Accountancy Europe. This Monday, they issued an information paper, which is a curious title. It seems that they struggled as well, because I think that the idea of information paper is to keep it neutral. That's my perception, but it includes very interesting information, and namely about the numbers and where this is happening and what kind of structures and investments are being. So please read it. But we know that these things are coming every week, every day. So this is really challenging to keep informed and be able to work on the different things that are coming in. Finally, the two comments I think we got about the link between this project and the Firm Culture and Governance project. Of course, we knew it from the start. It's not new. We knew it, we know it, and we always said that one day they might be, coming together. The decision to separate the two things was very, I would say, pragmatic, because they were two topics which were at a different level of maturity in terms of thinking, knowledge, and etc. So it was very pragmatic, but of course we know that there is a strong link, and that's what, for instance, regulators are questioning all the time. This is one of the most relevant, very relevant and significant. There is a potential for a significant impact in the culture of the company. So, well, I'm not saying that anything, but that this is acknowledged, and we know that, and we'll see what we can do or what we should do going forward. So the staff will take these comments on board. I don't know if Linda, John, do you want to add something here?
Very quickly. So what are the next steps? Finalize the staff alert. We want to get this out as soon as possible. We're targeting the end of June. That's our goal. And then afterwards, continued monitoring by the EIOC, and we'll see what else needs to be done as more arises on this topic. So thank you, Chair.
Yeah, I would just jump a bit of the expectations here, Linda. So I think the staff will need the time, the project team will need the time to evolve this document in light of the board input. So June, I think would be not a practicable timeline. So we would need to go into the third quarter, really make sure that we get this document in the shape it needs to be.
Sadia, do you want to say something?
Are we not missing an opportunity? If we take too long with this document and try and be all inclusive, and there were many comments telling us to go longer, and we spoke about simplicity a lot this meeting, I feel like we should try for something at a first step rather than try and be perfect, complete, all encompassing.
Thank you, Sadia. Mark, please.
Absolutely agree on that point. And having listened to all of the discussion around the table, this is a complex area. So you're not going to be able to write anything without there being a significant sort of technical piece to it. It's also developing at pace. So, we need the sort of caveat disclaimer, this is not comprehensive about everything. But I think it's much better to get something out there and show that we're, at playing a leading part in the debate and not wait until later on.
Thank you, Mark. Chana, please.
Something for the project team to consider is how if you separate it into like a part A and a B. Part A is like more information and the issues. And then part B could be an illustrative example with diagrams, references to the code. So that way, you sort of, somebody who's at a more executive high level can read the front part, and somebody who needs to work through the considerations can use the back part. So it's something just to consider.
Thank you for the proposal, Chana. Tomoyo, please.
Thank you, Chair. While I agree on the Sadia and Mark's point, I think June end is not a practical date considering the feedback that was raised today. And I think we need to avoid I was quite surprised for the IESA one when after the fatal flaw review, it wasn't actually a fatal flaw review, and it went all to the beginning and restarts. So to avoid such kind of things, I think we need to be quite reasonable about the timeline. Thank you.
Thank you, Tomoyo. Rich, please.
Yeah, I think I'm with Ken on a practical basis. I don't think it's practical to think we're going to get this out by June 30th. To do justice to the comments, even if it's to skinny it down and give different levels of staff the chance to read it before it goes out, as I've observed this. But I maybe could say this, when Ken said third quarter, I don't think we're talking September. We're talking sometime early to mid-July, right?
Yeah.
Okay,
Yeah.
I just want to alleviate that a little bit. So I don't think we're losing a huge window in response to appropriate comments made by a couple of board members, to Mark and Sadia. So
Yeah, just to clarify, the context of my comment was that we're already mid-June, and we have to recognize that the project team will need time to turn around the document, even to skin it down, as you say, Rich. And this will not, well, I will have to review it first, and then it will have to go to the board, and that is a process in of itself. So I think July is really what we're looking at, not the end of June.
Thank you. Rania, please.
Thank you. So, I mean, broadly speaking, my comment is that I think as an approach, regardless of which exact date you think or time frame you anticipate, I think as an approach we need to try to be more agile. And I think perfect is the enemy of good. If we want to get it perfect, I think we risk, always lagging sort of behind. And I think these types of documents, they give us that space not to produce something that is so perfect. So I think we should make use of it so that we feel that, we are not lagging too much behind, and we are, and at one point we should also try, to be more ahead. That's one thing. The other thing is, would you consider benefiting from the efforts of the marketing and the communication? Like once you have the staff alert out, to try to perhaps very much to Chana's point, like you get the whole document out, but then you highlight certain pieces through different types of posts or different forms of media and communication. So thank you.
Thank you, Rania. James, do you want to speak?
I think there's a role for the board to provide a little bit of cover to the staff. When this comes out, I think, and I think it would be important for all of the board members to have a couple of common thematic messages that we can all agree to. We do not want to feel different about whether this is the right scope, our degree of uncertainty. Are we intending to cause harm, attack, or are we looking, as Ronnie has said, something that comes from the board as a message of why you've asked staff to do what they've done, I think will provide a lot of cover to the document. It'll protect ourselves, but it will get the right message across. And I think that's probably more important than the document, but the document shouldn't do harm. And I think that was the general message: be ambitious, but be careful.
Thank you, James. So I recognize that there is some work to be done. I agree that we need to stay agile and that there is an opportunity here that we should, as much as possible, not try to miss. This has been the timeline of this staff alert has been a moving target as well. And I have to, I have been speaking about it every time I'm asking different meetings about staff alert is coming, if staff alert is coming, then the dates move, and then we see others, anticipating a few things. So I really think that with all the consideration that we must have to the need of having something which is technically right, and that we don't make any mistakes, and that it's a document that honors the work of this board, and it is already very close from that. That's my impression. It's that from that presentation, from the document, we are very close to something which we can go out without too much concerns. Of course, these comments were very valuable, and I think that the staff is also grateful, because it's going to be possible to refine the document or even do something on the document in terms of structure or whatever, which addresses these comments and makes it even better. So if it's not 30th of June, I'm not going to say the 1st of July, but I think that we should not go much beyond that, because it's the opportunity, it's the momentum, and we have been for some time saying there will be a staff alert, there will be a staff alert, there will be a staff alert, but there is a moment where we need to come out with something. So I think we are going to get this right very soon, or as soon as possible. And thank you very much for this wonderful discussion and for these comments, all the careful way you read the document, which is what your comments reveal. And this is very valuable for the staff and for the final result. So we will break now. We are half an hour late. So we will restart at 10:50, okay? Or is it too much? 10:50? Okay, 10:50, we'll be back. Thank you very much. So I apologize for this delay, but there were some housekeeping issues preventing me from coming back on time. So thank you very much. We are now moving to the next session, which is going to be the last one in our public session. And the objective of this last part of the session is to consider the forward for the forward work plan for 2025, the rest of the year, and 2026, following up on the discussions that we had on Monday. So again, this is an important moment. We think that that after the discussions, the very substantial discussions that we had on Monday on the future strategy and work plan, all the very good contributions received and some significant agreement that we got, or I would say almost full agreement that we got around the table around the position from the IESBA to face the future months and to deal with everything that is happening around the externalities, the developments on the external report, on the external ecosystem in terms of financial reporting and things like that. I think that this is going to be well, not I don't expect many surprises, but still, this is here for the board members to consider and to agree and decide if this is the path and the direction that we want to take. So the staff kindly tweaked a few things in the initial proposals that had been made, and I'm going to pass to Jeff for him to present on the changes or tweaks or adjustments that were made in light of the discussions that we had this Monday. Jeff, please.
Thank you, Gabriella, and good morning, everyone. So in this next session, we're going to walk through with you two key components. The first one is the overall IESBA strategy based on the board's discussion on Monday, and the planning committee also had a chance to discuss this afterwards. And then after this, we will also walk through with you a draft work plan, which we sent out to the board yesterday, and I'll highlight some of the key changes that were based on the discussions that this board had over the last few days, and also the discussion the planning committee and also the firm culture governance project team had in response to those feedback. So first of all, thank you again for the robust discussion, of course, on the overall IESBA strategy. Just to remind, just a refreshment that the board was supportive of the strategy, overall strategy going forward, but I've made some suggestions and also highlights perhaps that we should include in our overall strategy. So you will see that the first I guess change that we have made in this overall strategy. Again, once we agreed, of course, going forward, we'll have comms communication and other documents to kind of explain what this strategy is. But we have included the word including simplification under reinforcement of support for adoption and implementation, recognizing that the concept of simplification was brought up quite a lot during Monday's meeting, and the board recognizing the importance of it, but also recognizing the breadth of it. It could mean certainly it touches on everything that this board will be doing going forward, touches on the development of non-authoritative materials and other supporting materials, NAM and supporting material. Touches on the way that we would look at post-implementation reviews, and something that there's a few that this board will be looking at over the course of the next 18 months or so. It will the concept of simplification will also touch on the way we do our messaging, various comms material. So really we want to, and of course from an adoption and implementation perspective as well. So that's why we've added including simplification there. Then the last bullet point there in terms of slowdown standards issuance, what the board discussed is that whether we really need to I guess spelled out no new standards given before 2027, given that we need to be agile, and we need to give some room that perhaps there may be things that this board will need to consider. So the planning committee had taken these comments on board, and so what we agreed to perhaps in terms of messaging as a strategy is that what we're saying is, we need to recognize the next 18 months as a period of stability. And that means no new major standards before 2027. And so that so we made that change. So those are the couple of changes that we put forward, taking into account the discussions that this board had on Monday. So Gabriel, I might just keep going with the work plan if you want to, or do you want to stop here to get some feedback first?
Jeff, I think you can move to the work plan, and
Okay.
then we'll take comments about both, because they are interrelated.
Thank you, Gabriela. So I'll just ask Carla to bring up the work plan as well. We sent you the draft work plan agenda item 2E yesterday afternoon. So what I will do in just a moment is to walk through some of the key changes with you. Thank you, Carla. If you can make it a bit bigger, if that's possible. Okay. First of all, just thank you, Sunam, for highlighting some minor edits in the lead-in. It should be 2025 to 2026, not to 2027. So thank you for that. First of all, the first initiative or project there is firm culture and governance. And of course, like I said, the project team, along with our board advisors, China and Rich and Gabriela as well, we've had the opportunity to discuss the feedback. And as you may recall, the board agreed that we will first develop a series of fact sheets. The fact sheet is probably not the best word, but let's for the sake of moving forward, we'll just use the fact sheet for now. But essentially, these are one pages covering the 8 elements in term based on what we've heard and what we could see is the in a sense universal truths of about these 8 elements that these aspects of these 8 elements that are not really contested and that people see as important and that this board sees as important. So what the project team has discussed is that we are looking at presenting the draft fact sheets in Q3. So at the September board meeting in Lisbon, we are looking at presenting the draft fact sheets there. And then we're looking at finalizing these fact sheets with the board in Q4 in the December meeting back here in New York City. And during that time, of course, we will have the opportunity to also get feedback from some of our stakeholders from the profession and other stakeholders as well. So that is the plan. But we're also planning that in Q3, we will also looking at presenting a plan in terms of the other NAMs or supporting material and tools that we may develop over the course of the next 18 months. Of course, you may recall that there were a lot of suggestions in terms of the format. And I think there is certainly a sense that let's not just rely on written material, and there's a lot of benefits in using other forms of other forums, for instance, interviews or podcast or other different ways of communicating our message and communicating the content. So the project team will be looking at presenting a draft plan in terms of what we look at developing for the up until the end of 2026 at the September board meeting. So I'll go into maybe Carla, if you can also go into the 26, just might flow a bit better for firm culture and governance. You will see that in Q3, what we have signaled here is that at this point, in Q2, I beg your pardon, at the Q2 board meeting in 2026 next year, in addition to discussing the NAM and other supporting material, we will also look at perhaps giving a sense of where we got to in terms of the approach to developing the firm culture governance framework, and I guess have that discussion with the board. Now, of course, the project team, and we do discuss this on Tuesday, is as we develop our thinking, as we prepare and develop these NAMs and support material, as we talk to stakeholders, we will, of course, develop our thinking about these 8 elements, our thinking about the framework, and the project team and the board advisors feel that this will be a good time to kind of come back to the board and perhaps discuss where we are at that point in terms of the approach to the FCG framework. So Carla, if you wouldn't mind, just go back to the start. So I'm just going to walk through with you also what some of the other things that we will be doing this in 2025. First of all, you will see that the strategy and work plan there for 28 to 31. Just again, a reminder that we will be developing the SWP for the next period after this June board meeting. And we will look at coming back to the board in Q3, certainly at least some discussions on the strategy survey, and then approve the strategy survey. This is aligned with what IESBA is doing, because going forward with this SWP, we are having very close coordination with IESBA, because many of our stakeholders are essentially the same stakeholders. And of course, the SAC will, as part of the due process, will have an opportunity to comment on the strategy survey in the October meeting. As you might recall, the SAC gave us a lot of thinking, and we had some great discussions about about trends that may influence and impact our work. And so that will be a follow-on from that discussion as well, and that will happen in October. So we are looking at, for the remainder of this year, approving the strategy survey at the December board meeting. And the aim is we will be looking at approving the SWP not in 26, but in 2027. At this stage, the tentative plan is September 2027. The other thing I want to bring to the board's attention is that in terms of the NOCLA post-implementation review, of course, that it was already on our work plan, and there's no change for that. The board might recall the discussion on Monday about bundling perhaps another post-implementation review, and we talked about the restructure code and escalating the post-implementation review of restructure code. So that is what we discussed, and the planning committee also agreed that is a good approach. So essentially, we will have these 2 post-implementation review. And of course, the idea is that, for instance, when we go out to speak to our stakeholders and seek their input, for instance, if we do surveys, we will be able to just have that one surveys rather than having 2 teams and having 2 sets of surveys and speaking to them at multiple times. That could be done all at once. Just a reminder also to the board that we will be developing our approach to the post-implementation review in conjunction with IESBA to make sure that we have a consistent approach. So this is what the new project team will be working on as well. And then the bottom 2 work streams are already on our 2025 work plan. And of course, we will continue to, we will be starting those, and we are looking at coming to the board in September with some general discussions, initial discussions at the September board meeting on these two work streams. The first one is development of professional agnostic independent standards for SAEs outside the scope of the international independent standards in Part 5 or review of Part 4B. And then the second one, of course, is the role of CFO. And so we'll be looking at starting these just initial fact finding, initial problem definition, looking at what the issues are, so that staff will be putting together two new teams to start working on those. If we can move to keep moving down, Carla, thank you. And then what we've done in terms of the adoption and implementation working group is just we've removed the reference to sustainability and experts, recognizing that we are looking at adoption and implementation, not just sustainability and experts, but more broadly as well. And we talked about potentially that we will need to look at whether we develop more support material for some of the other standards that are becoming effective or have become effective, for instance, such as technology. But those things, could be done by other groups as well. For instance, technology that could be done by the TWG, of course. So moving to 2026. We've talked a little bit about the CIVs. Of course, we just leave it there, and depending on how the discussion goes in September, as the project team presents the finding of the response, rather the key responses to the consultation paper, and the rest, it's pretty standard. Perhaps I would just add that long association post implementation review. We were looking at start that at Q4 in 2026. So those are the things perhaps I just would like to bring to the board's attention. So again, firstly, the strategy, and then also some of the key elements to the work plan and some of the key changes that we've made to the work plan for 2025 and 2026. Just a reminder to the board that we put some stuff there, and we will follow this plan. But of course, as we have brought up many times, that this board is that the need to remain agile. And if there are new things that come through that we feel that we need to put resource on and need the board's putting the attention on, we will adjust as needed. So with that, I'm going to pass it back to you, Gabriela, for the board's discussion. Thank you, Gabriela.
Thank you very much, Jeff. Yes, and I'm not going to add anything. And now it's really open for comments from the board members, questions. It's time for us to decide. So whatever comes out of this session today is what's going to guide us for the next times. So I expect you to take this moment to say whatever you have to say and valuable things so that we can finalize this work plan. Sungnam, please.
Thank you. I have a few questions. And firstly, in terms of the project on CFO roles, didn't project team propose it defer to 226?
Thank you, Sunam, for that question. I think based on the discussion on Monday, we felt that there is a sense that we could still progress and start in 2025, but perhaps not necessarily at the same pace, but very much focusing on looking at what we call the problem definition, but really identifying what the issues are, and so that's what we're looking at, and perhaps then coming to September, just a very open discussion, very much an initial discussion in 2025 in Q3.
Then the next question is in terms of fact finding, does it include a problem definition, what study or analysis, things like that?
it could probably include a lot of things in there, but I think we've taken out the word problem definition because that itself needs to be defined almost. It's not that, you know. So we're just trying to say fact finding is a broader term. But initially, I think we've taken the comments on board, and also the feedback that we've heard from stakeholders is not jump to conclusion too quickly, but really spend our time and to look at what the issues are and spend the time to look at stakeholders and talk to stakeholders. I don't know if Ken or wants to add anything.
Yeah, I don't know that we need to be overly specific on the terminology. So now I would say at this stage, because to my mind, the initiative on looking at the role of CFOs and other senior PIBs is more to understand how that role is evolving in the context of essentially the turbulent times we're living in. These are individuals who are at the confluence of a lot of the very pressing issues that businesses are grappling with: technology, sustainability, regulation, deregulation, cross-disciplinary functionality and operations within their teams, within their organizations. So really understanding how that role is evolving from perhaps what the code traditionally would have considered to be the role of CFOs, meaning the ones who are essentially responsible for the financial reporting. And in the light of that understanding, to then consider whether the code is sufficiently robust in addressing the ethical considerations that they have to bear in mind in operating in those roles. So that is the nature of the fact finding, to understand whether the code is sufficiently up to date and whether there's anything perhaps that might need to be revisited relative to the ethical expectations for those individuals. So that is what it is about. Whether we get to an articulation of the problem at the end of that fact finding is something that we will discover in due course, I would say, having then performed all the fact finding procedures and activities and so forth.
Thank you, Ken and Sungnam. David, please.
Thank you. So a couple of observations come to mind, and I'm going to circle this back to what we've been talking about this week. So two key themes in my mind have come out this week. One is simplification, which can mean a lot of different things to a lot of different people, and I appreciate that. The other one is speed. So when I look at what we've got here, with just reflecting back and with the utmost respect, there's a lot of talking and there's not necessarily concrete deliverables. And I accept, Ken, your comment that we don't want to be too specific, but I think specific enough that there's something clear in the minds of all of the stakeholders we have around what they can expect to see from us over the next 18 months, I think is really important. To the point that Sunam raised around CFOs, and you know that this is a topic really near and dear for me. I'll be quite candid. 18 months to get to a point of a kind of a recommendation in the business world is way too long. Now, that doesn't mean that we'll finish it in 5 minutes, but I think we need to be also reflecting a little bit on what our stakeholders need, the speed of business, the speed of technology, and how do we make sure that we remain a relevant player in the dialogue and we don't candidly let other players in the market start to take the proverbial microphone and be the ones that become loudest, and we potentially have questions around our relevance and our importance. So I would say those are probably two of my big observations. Can we get a little bit more specific about at least some sort of deliverable, so there's some clearer expectation, and then perhaps we refine a little bit what some of that is in some of the projects? Because I know, for example, Linda and I chatted earlier this week about CFOs, and I think we can define the problem statement quite clearly actually by the end of the year. The problems are quite universal. They're reflected. We see them all the time. We can get that feedback from PAOs who've got thousands of members, from CFOs directly. So I think there are perhaps some projects we can move a little bit forward on, and giving some clarity on specificity, or at least directional indication that they can latch onto and say, I get that, would be very helpful. So just something to think about. And I know, for instance, in the business world, it's sometimes referred to as SMART goals. So specific, measurable, achievable, and so on. Maybe thinking through how that might translate a little bit more into what we do might help on the simplicity side, but then also keeping us relevant. So just some observations.
Thank you, David. Obichukwu, please.
Thank you very much. My point on the work plan is on firm culture and governance. I'm thinking, like Jeff said, that we are trying to be agile. And being agile, I think in 2026, there should be that we should do more on that. I think there should be a quarter that we should be discussing we should be looking at drafts of the framework. So given all that we have discussed, and also the private equity investment, I think we need to be very agile on this firm culture and governance. So attributing only one quarter in 2026 for work on it, I don't think it's sufficient for us as a standard setting board. So I think Q1 and Q4, Q1 approach, then Q4, or even Q3, there should be like a draft presentation of the framework. The work we have been doing on the NAM till then can also help in doing more work in 2026 on that. Thank you.
Thank you, Obichukwu. Mark, please.
Thank you. I find myself in sort of a very similar position to David, which is that there's an awful lot of talking in this and not necessarily enough activity. And I do think, you know, the broad areas that we're proposing to cover seem to be the right areas, but I do think we could be more ambitious in moving things to something tangible. I wonder your sort of broader point that you make about an uncertain world, the need to be agile, the need to pivot, is I think we should, you know, very clearly sort of put a statement around the board's reconfirmation of its strategy and work plan. But, you know, it's an uncertain world, and we remain, you know, ready to act sort of as appropriate. And I do wonder whether we need to say something more explicit about the way in which we use the EIOC to bring things to the board, where there are, you know, things that need addressing as a matter of urgency. You know, because it is quite obvious that there is going to be a difficult economic period, and therefore that will bring with it ethical challenges. The one thing that I think is missing based on our discussions this week is we had a very good presentation earlier on about the communication strategy, how we position the board, the sort of the smart objectives. We've got nothing on that. And actually, you know, given the uncertain world and the other challenges, being able to perhaps spend a bit more time as a board thinking about not only the sort of the strategic focus that Rui set out for us, but how we contribute to its delivery as board members and other things, and almost hold ourselves to account a bit for it, because it's a bit too easy to just think that, you know, Gabriella can do another 4 circuits of the globe or something and that ticks off that thing. So if we could get something specific in there about the communication piece, but also I think, you know, in the positioning and the messaging, we will be responsive and we'll look for opportunities to advance some of the things, rather than just say potentially in Q2 next year we've got a board meeting that is 16 discussions but not a lot else.
Thank you very much, Mark. Rich, please.
Yes, and this may just be clarification, but I noticed in the work plan we have sustainability rollout, IMAG, And then we have down below A and I, and it says discussion. Is that designed to reflect the discussions we've had around A and I activities that go beyond the sustainability project?
No, and the rollout, really that will conclude towards the end of this year anyway, and then that will just then wrapped into the A&I working groups work. And of course, the staff involved are really, particularly with sustainability, and Sylvia's involved in IMAC, and feeding that information back to the A&I working group. So that's perhaps that's how the work is being moved.
So do we have a work stream to look at A&I on tax and technology, and if there's other standards we think we should apply that to? Because I thought we had talked about that this week.
Well, let me come in here, Rich. That work is going to be picked up under the A&I work stream, but with some caveats that there are separate work streams that are looking at individual standards. For example, tax planning, we have a rollout working group that's looking at this. There isn't a specific work stream because we've done the rollout activities already. If there is a need to document, for example, how jurisdictions are moving on the adoption journey, that is work that staff will do, and we will connect with the rollout working group, the board advisors who are assigned to this particular work stream. But otherwise, the A&I working group has a very substantive work plan, which has been presented to the board earlier this week. So that is what this is going to be focusing. It's not going to be picking up any work on sustainability, because essentially the rollout work on sustainability will essentially be done by the end of this year, as Jeff has indicated. And then anything to do with the implementation will be picked up by the EMAG.
Okay.
Yeah.
I'm just trying to figure out where you're saying we're positioning if there's need for A&I as it relates to tax. I'm just going to use that the tax implementation working group, to the extent that it meets, would take that on.
If there is anything
And
that
if something comes up, we would get that on here?
Yes.
Because
yes.
what I was getting at is, in response to some of the comments, I think there's more activity going on some of these things, or at least that we've talked about. And I realize we're not going to list every detail point, but I don't think one should look at this and think we're not doing a lot. I really think we're pretty full. Thanks.
Thank you, Rich. Amajit, please.
Thank you, Chair. A very quick comment on FCG. So specifically on the NAM and other supporting materials. So what I noticed right up to the end of 2026, what we've indicated is discussion on NAM and other supporting materials. I was just wondering if we can make it a little more outcome focused. Maybe we can indicate some milestones, just bring in a little more specificity, some targeted outcomes for various quarters. Maybe we can't do it immediately, but if we can think over it and then put some specific action, specific outcomes, actually, targeted outcomes in the work plan, that would be helpful. Thank you.
Sorry, thank you, Amajit. Nancy, please.
Thank you, Chair. I may be expressing a little bit of a different opinion than some that have been expressed on speed and specific deliverables. I'm going to use another analogy, and it's not like I really do IT development, but I'm going to use another analogy from IT development, and it's part of that, again, that agile methodology. And in an agile methodology, you would first identify business requirements, which sounds a lot like fact finding to me. It's a very critical step in order to identify what your objectives are and whatever you're working on. In the next stage, there's this concept of minimum viable product, sometimes referred to as MVP, which does not mean most valuable player, I've learned, kind of the hard way. But in minimum viable product, what it means is, what does it take to get to your meeting your objectives and those business requirements, i.e. whatever you determine in the fact finding that is necessary to be effective. In that context, all of these elements are critically important to achieving an effective deliverable, and I don't think we should shortchange that those are absolutely essential and are deliverables in and of themselves. So we want to get on this ultimate path to get something out, but if you don't take these steps, then what you get out is probably not going to be your best outcome or meeting your minimum viable product. When I heard the initial presentation, I wasn't going to comment on, but my reaction was, this looks like a lot to do. And there are always constraints. Every organization has constraints, staff resources, et cetera. And there will be things that come up. So I just want to acknowledge that while I appreciate a need for speed, I appreciate that we have obligations to help protect the public interest and get information out that allows those users to meet their obligations there. At the same time, we make choices. And so those choices can range from doing a little on a lot as one end of the spectrum to doing a lot on a little. And there's probably some balance in between there. So I don't have a specific recommendation, but I do want to be conscious that we need to acknowledge constraints as we're making decisions about what to prioritize and how to action these steps. Thank you.
Thank you, Nancy. Rania, please.
Okay, thank you. So the way I see it, I think the board has to make a decision. I think we have the dilemma that I see before this board is that the landscape is evolving so rapidly, and we feel, I mean, very much to David's and Mark's points, that we need to be agile, and speed is very important. And I agree with what David said, like 18 months to get something out. I think in the business world that is too slow. But at the same time, we hear from our stakeholders that, we need to slow down. And so I feel that we are in this, in this bind, like how do you balance these two? So I think we have to make a strategic decision as a board. It's like to be willing to change a bit our approach. Not everything has to be a standard setting project, a major standard setting project. I think we should be willing to consider that, okay, and we hear from our stakeholders that the code is just like ever growing and it is becoming complex, and so you have these really contradicting issues that we are having to reconcile as we set our strategy and work plan moving forward. So I think that the issues that we have in this strategic work plan are very obviously very important issues, very viable issues. We have to address them. I think perhaps we should reconsider how we address them, and not everything is a standard setting project that should add I don't know how many more pages to the code. So this is my first point. My second point on the work plan, and so just to go back to the initial thing. So for example, staff alerts or thought pieces, or they can be just as effective and address the purpose, and we can show that we are, for the lack of a better word, like we're a think tank, we're ahead, we have the knowledge, we have the expertise, to try to position ourselves as such. But not if we're going to wait. I mean, if we continue to hold on to the way things have been done by the board since its inception, I think we have to evolve. I believe it is incumbent upon us to consider a change in our approach. This is my first point. My second point is with regards to the profession agnostic standards. Obviously, we have delayed them, but if you look at the end of the Q4 for 2026, we say exposure draft. So in my mind, when I see this, I feel that a decision has been made to go ahead with this. And I think our stakeholders are telling us, you know what, wait, let's reconsider. So I'm not saying we shouldn't. All I'm saying is we should really make it a point to reconsider this if we want to really listen to our stakeholders. And then finally, for the strategy, for the work plan for 2028 to 2031, so I see that, you know, we have put in the plan a survey, a consultation paper, and we're going about it the same way as we've done before and as we've done for this, for the current strategic work plan. But I would recommend that we consider perhaps a different type of input as well, just to, you know, just to make sure that, you know, we, for example, perhaps there are certain stakeholders that we may want to engage with, like directly, and not just rely on the strategy and work plan, because sometimes what we get on the survey and the consultation paper, because sometimes we hear something in the survey and the work plan, but then in like direct discussions, you get a different vibe, a different sense of what the concerns are, of different issues that perhaps we don't actually put out there in the survey or the paper. Thank you.
Thank you, Rania. Okay. So thank you very much. Amajit, I see your hand, but I don't know if you want to come in again or if it's just because you forgot. Okay, thank you very much. So these are, I think, oh, Vanya, sorry.
So I would like to start to congratulate the planning committee to having in such a short period of time since Monday to come with this proposal for us. And I understand that we set a plan not so long ago, and we are now visiting it because it is necessary. So I understand that this proposal is the best possible in the moment that we are living. And we are flexible enough, just in case something happens, to sit again and review a new proposal. So I think that what we have now is the best possible proposition because we do not have a crystal ball. So I'm pretty much supportive from what is being presented here. Thank you.
Thank you, Vanya. So sorry, Abichuku.
Thank you. I just want to lend my voice to what Mark and Rania has said concerning stakeholder engagement and what we discussed in the communication agenda. So I'm thinking that, like we said, talk about conferences or things like that, that it should feature in this strategic work plan as part of what we intend to do 2025 to 2026. So get a direct stakeholder engagement, because it looks as if it's just about us coming to discuss, coming to see what has been done. Thank you very much.
Thank you, Obichuku. So let me try to summarize before I pass to Tsego for the comments. Let me try to summarize what we heard here, because I think it's really important that everyone is on the same page and agrees on the way forward. So I think that on the strategy, on the overall strategy, I haven't heard many comments, so I think that we can agree that we agree on the overall strategic approach, or with the tweaks and the changes that were made there. That's fine, apparently. Here, I'll just make a comment, which was, or repeat a comment that was made here, that we necessarily, I think we have to link it to the SMART framework, which should be like a wrap or whatever, or guides, a framework to guide the strategy, you know, overall, and then in the different projects. And I think that's what I heard, that we should not disconnect this from anything from the SMART framework. So we'll need to see how to, and maybe it should be a little bit more visible, because I think, and that takes me to the second comment and summary, which is about how stakeholders will see this work plan. Because we know what we are speaking about. We had a lot of discussions here. When we see the discussion, this and that, we know that there will be a little bit more. We need to be cautious about how stakeholders read, well, that's what I also understand here, how stakeholders read the strategy and the work plan and which conclusions they take. And I think that brings me to the other topic that I heard here, which is we need to see more concrete things, more deliverables, more outputs, more milestones, which probably we all know that will be there. And I'm taking, for instance, the firm culture and governance that we discussed. Yes, we are going to do this and that. But what we see there until 2026 and is discussion of NAM. And if I were a stakeholder, probably now hearing these comments, I would say, oh, they will be discussing what they are going to do until the end of 2026, which, I mean, it's not going to be the case. And we should not allow that interpretation to anyone. So I think that the request here is to have more concrete things along the way than just discussion on many areas. Then the other topic was adoption and implementation reach. And I think that it was important that you made that comment, because yes, we agreed on Monday that we were going to do something with respect to some of the standards, or we might need to do more than just the sustainability, but also on recently issued standards. And one thing is the rollout. Another thing is other things that we may want to do. Namely, we spoke about a technology, which is an extremely important area where we are being requested to do things. We have a standard, we have materials. So thinking about what to do with this, what is standards and what can we do going forward, I think it was your question. Now, the way we structure the work, I think that we need to think about it. At the staff has to see what goes into the adoption and implementation group, what goes in a specific board, staff members or whatever. But I think that is something that we agreed and we should not lose it. I don't know if it's reflected in this work plan, but I think that we should not lose this. And the other, I think these were the main comments. So more outputs, deliverables, and concrete things along this work plan. We also heard about timeliness, about agility. So some concerns about how long things take, and maybe this is a consequence of exactly not seeing in this work plan any milestones or any deliverables along the way. So it's maybe not a matter of anticipating or changing the schedules, but more a matter of making ourselves, because it's also a lever for us and an incentive to have some objectives. So I think that's probably the issue there, that we need more concrete things. So I think this should be deliverables and concrete milestones. I mean, it's not only deliverables or outputs, but milestones and outputs as well. Consider this adoption and implementation work on other areas than just sustainability, be it in the group or in other formats. The SMART, that should be everywhere, in the sense that it should frame the overall strategy, but going forward, the rest of the projects and work that we do. So we might need to test against the SMART elements if what we are doing really brings them into practice. There is something that, going back to the overall strategy, and the fact that we all agree and is consistent across this table is a very good thing. Now, we also are responsible not only to set a strategy, but to make sure that we drill that strategy down into what we do. We bring the strategy to life. So, and not make it just a conversation. We need to bring it to life, and maybe not only the SMART. I think it's going to be a good instrument for that, but also I think that we need to keep on testing ourselves on whatever we decide and do against the objectives or the lines of action that we have agreed that were important for us. So this is my summary and this is my takeaways. But now I don't know, Jeff and Ken, what you suggest in terms of way forward. But I think that you may want to, look at the work plan as it is and see if there is anything that there is still to be changed or not in light of these comments that we heard.
Thank you, Gabriela, and thank you everyone for your feedback. That's very helpful. There's only a lot for certainly for staff to kind of take back and look at how we can make this very, very high level plan to kind of make better sense to people. I of course noticed that because some of this work is not immediately going to standard setting and in responding to your comment, Rania, and that's why we're trying to kind of not see standard setting as the always conclusion in every piece of work that we do. And so that does kind of perhaps create the perception that it seems like we're just always discussing things, because previously it's easier. If we have a standard setting, we know the process is at this point, we will decide, and then you've got ED, so it's very clear. But when we are not at that stage and we're looking for something more agile and different, it's hard for us to predict at this point what we're going to do. To Nancy's point is sometimes it's just one step at a time, and then we get more clarity about what the next steps are. And I think as we would develop this plan, that's what we're thinking. But I do see that there are things that we can perhaps look at making it clearer. For instance, if I look at the CFO, now this is just my view because the team hasn't even put together and start anything yet. But I think potentially, for instance, whether we push it forward or not, but the other thing that we could add is, of course, we always kind of give a draft report and recommendation, and certainly we can do that earlier because in some sense that is almost more important than finalizing the draft report itself. So we can give some more, I think we can go and give more clarity, just to bear in mind that we can only give as much clarity as we can. And again, we can put something there, but I think we also want to be, and so to give this board and our stakeholders a sense of we are moving things forward. We're not just forever, like a talk fest, but they're actually outputs, to what we're doing. But of course, we need to again remain agile. But I might pass to Ken first, Rania, if that's okay, and see if you have anything to add.
Yeah, and I do James want to come in as well. Well, I think you've summarized it quite well, Jeff. I don't believe this is not a redrafting the forward work plan. There are adjustments that we can make in the light of the board input. Certainly some clarity in terms of the outputs. Importantly, we have to be very careful that we are not anticipating what the outcome of fact-finding initiatives is going to be. And I think it was in the Part 4B profession agnostic work stream that we had indicated an exposure draft by Q4 2026, where we indicated that we're going to do the fact-finding and define the problem first, and then have the board make its due consideration as to whether there's a need for a standard setting project. So we can make some adjustments, and to Nancy's point, let's not presume that there's always going to be standard setting at the end of the day, but importantly that we need to be agile, be sufficiently prompt in our response, and come up with the relevant outputs, whether it's a fact-finding report or preliminary report. We can bring the level of specificity in the work plan. James?
Yeah, thank you. So first of all, thank you. I definitely agree that what you said, Jeff and Gabriela, like if we put milestones, it suggests that we're not just discussing and we are considering other types of outputs, like such as thought pieces, definitely. But what I'm putting forth is perhaps for the board to consider a change in mindset. Like if we start thinking about, like, it's not that not everything has to be a standard setting project, but rather if we put it on our, radars, like all the emerging issues that we identify after we have discussed them and we have reached the conclusion that they are indeed valid issues that warrant our attention, to say, okay, fine, we're going to be issuing a thought piece or whatever, or a staff alert, or so rather than like when we talk about our work, it seems to me like if somebody is listening in on our conversation, it seems to me that, really the rule is a standard setting project. The exception is something else. What I'm saying is, let's consider perhaps a change in our approach or our mindset. Let it be part of the way we do things, is that to be fast to market, to be quick to market, because like we look around us and we see all those like accountancy Europe, with this different communities getting things out. And I'm saying, well, let's change our approach. Perhaps all the things that we deem as a board to be really important things, significant things for the profession, let it be on our agenda to issue some, I don't know what you want to call it, thought pieces, whatever, like it could be any combination of them, one or two. And then the standard setting project is one other output that, of course, is basically what we do, but it's not the only thing that we should consider doing on a regular basis. So those other types of materials should be part of our regular, in my opinion, regular thinking and the way we do things and approach.
Okay, thank you, Rania. I think that these comments are important because it clarifies a little bit that the request for output for deliverables for milestones is not necessarily on the standard setting area, but on the other areas, and, for instance, FCG or adoption and implementation, that we are a little bit more specific about what we are going to put out or whatever over these next 18 months. I think it's more, can be more a matter of perception, because we see discussion, and it creates a perception that yes, we are a think tank world, which we are not, and we don't want to be. So agree with you. We need to think a little bit, go a little bit beyond the standard setting thinking and process, because we agree that we are going to do mostly adoption and implementation in a broad sense, so and that we need to, achieve some whatever milestones, or have kind of plan of what we are going to do, etc. So this is important. And I'll leave it to the staff. Oh, James, sorry, I hadn't seen your.
Sorry, I'd like to just frame what some of the thoughts I've heard, but I get nervous about choosing between too fast or too slow. And I think our stakeholders, they're not going to say you're too fast or you're too slow. What we're hearing is that we're confident that you know that you've bottomed out an issue, that you've got a role to play in that issue. You know how and what that looks like, and you know your path forward, right? So on say, for example, CFO, the concern of we can be quicker, we can put out a problem statement, and we can have that done tomorrow. What I'm hearing is, have you made the right decisions to arrive at your action point? And so I just want to frame this is what I don't want, deliverables and outputs and milestones. So that is going to lead us to report. How do we get to the report? First read of the report, second read of the report, right? And then before that discussion, but maybe I'll encourage what Nancy was suggesting, there's decision points that the board is going to make along that journey. So when we think about, say, for example, CFO, there's going to be a decision point within all of those discussions that the board is asked to concur. The first one might be the preliminary problem statement. Secondly, validity of that statement relative to our role. Third, scope. Fourth, feasibility. Then your fifth. So the board is engaged, and I think what I'd like to be able to communicate through that is, where are the decision points of the board towards what outcome? To Rania's point, it provides an opportunity then to decide your course of action, your solution within the steps versus going to the solution. So I just would stay away. Sorry, I do think there's deliverables. I do think that there's outputs, but I also think there's decision points. And I think that if that could get reflected at a high level, I think it would reflect more of what the board is going to be asked to decide on or conclude as part of the journey.
Thank you very much, James. The staff and the planning committee will take these comments, right, and see what we all can do to take on board some of your concerns and some of your very good suggestions with respect to the work plan, more than to the overall strategy which fortunately has been well agreed and does not pose any problems. So it's just a matter of adjusting, making sure that the work plan really reflects the strategy and reflects in a way that not only we understand that it is reflecting the strategy, but it also provides or allows stakeholders, external stakeholders, to understand how we want to navigate this slightly or very different strategy that we are adopting now. So thank you very much for this wonderful conversation and contributions. This is really important. I don't know. I think that we will then go back to the board with some or many or no changes to the work plan, depending on the discussion that we'll have, and of course keep you on board and involved. So I'm very sorry, but we are very late, and we have Chris Arnold there waiting. Sorry. Yeah, we have to close. But sorry, but first I need to ask Tsego. Tsego, can you, do you want, of course you want, I'm sure, to speak before we close this?
Thank you, Madam Chair. I think this afternoon we did discuss a bit more technical things. I think the point that I just wanted to flag as we talk about what we talked about this afternoon, and including the work plan just presented, is maybe to identify opportunities for those projects that are interrelated, to be able to then work them together such that we have some cohesion and we have some sort of output that would ensure that those fit for purpose interventions address the various pieces of work. For instance, the firm culture and governance, looking at the alerts piece that we looked at earlier, and then also the ISQM1 issue. Those sort of that have the same sort of governance impacts, to look at them and with the hope of addressing ethics from that specific space. Where there are similarities, to perhaps consider those to be run alongside each other. And then the last point, as we do that, perhaps to also dial that back to the IESB for better coordination and ensure that there's alignment as we move together and move along together. Other than that, Madam Chair, I really want to appreciate the board for the robust discussions and ideas that have come out. I think from the PIOB perspective, it does indicate that we are listening to stakeholders, we are taking the stakeholders' input on board, and more importantly, to ensure that we move together as the board, and that actually does code impacts. I also want to take the opportunity to thank you, Madam Chair, for the way you've chaired the board so far. Good governance principles coming through, allowing each board member to really outline their ideas and then bringing it together for direction at the end of the day. So thank you for that, and thank you for allowing me to be part of the conversation this week. Thank you.
Thank you very much, Tsego, first for your nice words. Secondly, for your thoughtful comments and the recognition which is good, that the board is moving towards the direction and the objectives that we have established. And it's important to know that as an observer, you understand and conclude that we are really making the way in the direction that we are saying that we are doing, because we need to walk the talk, not just saying that we are doing anything, but translating that into very material things. So thank you for that recognition, Tsego. And thirdly, thank you for your time and patience attending these 4 days of meetings virtually at very unsocial hours. It's very much appreciated, and we are very grateful to you. Of course, you will be still with us in the executive session, but I want to leave this public appreciation of your role and your week with us. So before we close the session, the public session, we still need to approve the minutes. The minutes were subject to consultation or comments to with the board members. Asked you kindly finalize the minutes. Thank you very much, asked you. And I'd like to know if everyone agrees with the last version of the minutes or if there is still any comment. No comments, so minutes agreed. Thank you very much. And these are my last words. I'm not going to take long because we are really very, very much late. But I, of course, first want to thank the board members for the amazing, terrific discussions that we had here this week. As I was expecting, by the way, the agenda, as I said at the start, probably didn't show or didn't give evidence of the substance of the conversations and movements this week, and that's something that we always need to confirm. But this was what I expected, but I confess that it even exceeded my expectation. All the board members, this was very consistent across the table. This was not 2 or 5 members contributing. Everyone contributed very significantly. I'm happy, and I hope that this continues like this, that everyone feels very comfortable to share comments, concerns, questions, and etc. Sometimes completely opposed, but in a very, not only in a very professional and open way. No tensions here around the table. And I hope that we, of course, we are always learning, that we will do the best out of this very, very strategic conversation. Once again, I think that we are really moving to this strategic board that we were supposed to become, giving strategic direction, observing around, thinking about the best way to do things, not only technically, but how to approach them, how to serve the public interest. So I think that's what's happened, what has happened here this week. And I think it was the first meeting ever since I'm chairing this board where we spent so much time thinking about these strategic questions. I'm sure that it will be very valuable for us going forward. I will repeat the call for us to be very attentive to ourselves. So see if what we have agreed as our strategy and approach is going to be put in place in everything that we do, and the approach that we take to the work, to the projects, to the decisions, to engagement, and etc. So it's not a one-off. We thought, and it's done. It's not done. This is the start of probably a different way of working and approaching the problems. I'm really, really very happy with this meeting, and I think it was a very important. It was it will be. We'll see it as a milestone or a landmark for this board going forward, because there were decisions and discussions here which will mark significantly the future and our relevance as an ethics board serving the public interest. Thank you very much. We are now the session is closed. The public session, we are now going to move to the executive session, second part. So I'll kindly ask all those who will not be with us to leave the room or the screens. And thank you for having been with us, all of you, this week. It was great to have these people here with us and others with us on the